Silver investors. The same Russia that spent 4 years trying to kill the dollar just quietly picked up the phone and asked Washington for a $12 trillion deal. The loudest de-dollarization cheerleader is now begging to get back into the US dollar system. And if you hold silver, that flip completely changes how you should read every crash, every BRICS headline, and every dollar is finished tweet. I'm OG John AG, and in this video, I'm going to show you what's actually inside that leaked Kremlin memo, why Russia's yuan and BRICS experiment blew up, what a $12 trillion please let us back in package looks like, and what that really means for silver after the 121 to 64 smash and this new 60-70 zone. By the end, you'll see why this isn't the end of the silver bull case. It's just a nasty reset of the narrative. Segment 1, what the leak really says. Bloomberg got their hands on a classified memo from the Kremlin, and Russia later confirmed it's real. Inside, Russia lays out a plan to re-enter the US dollar system for trade, offer roughly $12 trillion worth of long-term deals in oil, gas, nuclear, AI, and critical minerals. Use that package to buy back access to the same system they spent years calling dead. If de-dollarization had really replaced the dollar, this memo wouldn't exist. Instead, it shows you a country that tried to run on yuan and BRICS hype and hit a wall. Segment 2, the failed yuan escape. After the 2022 invasion of Ukraine, the West froze about $300 billion of Russian reserves and cut them off from SWIFT. Russia ran east, shifting trade into yuan and rubles and bragging that 90% to 99% of their China trade no longer used the dollar. But inside the Russian system, the freedom story looked ugly. Russian banks couldn't source enough yuan locally. Overnight, yuan rates exploded above 200% at one point. Payments to Chinese partners took 10-18 days instead of 1 to 2 days. Chinese banks, terrified of US sanctions, just refused to process some Russian trades. Meanwhile, the yuan itself is tightly controlled, more like a store-specific gift card than global cash. Russian firms earned when they couldn't easily convert or hedge, watched ruble-yuan swings eat their margins, started walking away from Chinese suppliers because the friction was killing them. De-dollarization didn't give Russia independence. It gave them a payment system that barely worked, and a partner holding all the cards. Segment 3, trapped between China's terms and a war economy. Cut off from the dollar, Russia had just one major lifeline, China. And when you only have one buyer, that buyer sets the price. So Beijing did exactly that. Bought Russian oil at 23 to 29% discounts. Took gas at lower prices than what Russians pay at home. In early 2026, simply stopped buying Russian electricity because it was too expensive. Back home, the macro picture deteriorated fast. GDP growth slid from 3.6% in 2024 to around 0.6% by late 2025. Real inflation estimates ran near 20 to 22%, while official numbers claimed 6%. Sales tax was hiked from 20% to 22%. Interest rates hit 16%. Oil revenues ran 25% below plan, with Brent expected near $60, and Russia still had to sell at a discount. Roughly 40% of the budget went to military spending. Low official unemployment, around 2.2%, didn't mean prosperity. It meant almost everyone who could work was locked into the war machine. The experiment of life without the dollar was hollowing the country out from the inside. Segment 4, BRICS talk versus BRICS reality. While Metals YouTube was screaming BRICS will kill the dollar, the actual BRICS members were saying something else. At the 2025 summit in Brazil, a 126-point declaration mentioned de-dollarization exactly 0 times. Officials openly admitted. India called the dollar a stabilizing force and said sharing a currency with China was impossible. South Africa said there were no concrete plans for a common BRICS currency. Brazil didn't want to push it. Indonesia wasn't interested in de-dollarization at all. Then President Trump put a gun on the table. 100% tariffs on any BRICS country that tries to undermine the dollar. If you're India, Brazil, or South Africa, and your exports to the US keep your economy alive, that's not a negotiating detail. That's a red line. Suddenly, the kill the dollar talk went from loud to silent. That's the backdrop behind Russia's memo. BRICS was never actually ready to replace the dollar. Segment 5, inside the $12 trillion Dmitri package. So what exactly is Russia offering to get back in? Kirill Dmitriev, head of the Russian Sovereign Wealth Fund, has been leading this with Trump's envoy, Steve Witkoff. The leaked memo outlines a 7-point package roughly valued at $12 trillion over time. Long-term oil and gas deals with U.S. companies. Joint development of massive Siberian and Arctic energy fields. Contracts to buy American planes. Vital after being cut off from Boeing and Airbus parts. Cooperation on nuclear energy projects. Joint AI and tech ventures. mining partnerships in lithium, copper, nickel, platinum, and other strategic metals, a joint push to boost fossil fuels and undercut rival green agendas. On top of that, there's the frozen $300 billion of Russian reserves in Europe, which can be turned into leverage in Washington's favor if a deal is structured cleverly. Europe sees the risk. If the US and Russia align on energy and commodities, EU sanctions become much harder to enforce. Russia isn't just asking for access, they're offering to reshuffle the global energy map to get it. Segment 6. What this does and doesn't mean for the dollar. On the surface, this looks like the dollar's victory lap. The loudest opponent wants back in. BRICS currency talk fizzled. A $12 trillion offer proves the dollar still buys everything. But the deeper message is more dangerous. The dollar is not safe, it's powerful. Powerful enough to cripple a G20 economy when weaponized. Every finance minister watching Russia's pain is drawing the same conclusion. We can't dump the dollar tomorrow, but we must have insurance in case it ever turns on us. That's exactly why central banks are hoarding gold, not selling it. China has been buying gold month after month. Global central bank gold demand hit multi-year records. Some banks now hold more value in gold than in their own currency. The BRICS currency fantasy died. The "we need hard asset insurance against dollar risk" thesis did not. Segment 7. Why silver sold off and what hasn't changed. When the memo hit headlines, markets didn't sit down to think through all this. Algorithms did something much simpler. Russia going back to the dollar, stronger dollar narrative. Stronger dollar, sell gold and silver. BRICS dream dead, remove some of the emotional premium from metals. And remember, this came just after a brutal flush where silver crashed from 121 to the mid-60s, roughly a 45% correction. One day alone saw a 30% plus intraday smash. Gold fell from about 5,600 to around 4,400. The market was already jumpy and full of forced sellers. The leak added a new excuse to hit the sell button again. Short term, yes, a firmer dollar, a more hawkish Fed path, the death of the BRICS currency story. Those are headwinds for metals. But underneath that, the silver math is stubborn. Annual demand around 1.2 billion ounces. Annual supply closer to 1.05 billion. A yearly deficit of 150-200 million ounces for multiple years. You don't erase that with a memo. Segment 8. The silver fundamentals the memo can't touch. Russia's pivot doesn't cancel the physical world. EVs still need silver wiring and components. Solar panels still need silver paste. 5G, medical tech, and defense systems still need high conductivity metal. Those pipelines are built on multi-year investment decisions, not headlines. On the supply side, silver mining doesn't suddenly ramp. Most silver is mined as a byproduct of other metals. New primary silver mines take years and billions to bring online. Recycling helps, but doesn't plug a 150-200 million ounce annual gap easily. Vault data and industry reports point to drawdowns in exchange and LBMA inventories over recent years. Ongoing structural deficits. A steady bid from investors who buy real metal, not just screen price. That's the backbone of your silver thesis. The Russia memo doesn't change it, it just shakes who holds the metal at what price. Segment 9. What smart silver holders do with this. If you're staring at silver in the 60-70 range after watching 1 in 21 get nuked, here's the honest picture. Short term, expect more dollar back on top headlines. Expect more mood swings as traders reprice Fed cuts and geopolitical risk. Expect that silver can spike lower again if the dollar squeezes and positioning is weak. But if your time horizon is measured in years, not days, ask yourself 3 questions. Is global debt shrinking or rising faster than GDP? Are central banks reducing their gold exposure or quietly increasing it? Is silver's supply-demand deficit closing, or is industrial plus investment demand still outrunning supply? If the answers are dead up, gold held, or up, silver deficit still very real, then what this memo really did was kill one oversimplified story. Dollar dies tomorrow. Confirm the deeper one. Fiat is powerful but dangerous, and real assets are long-term insurance. In that world, silver at 60-70 after a flush looks less like the end, and more like the uncomfortable part of the journey where weak hands change places with strong hands. You've been watching John AG here, and I'm OG John AG. If this helped you see beyond the Russia dollar drama and refocus on the actual silver thesis, hit like so content like this doesn't get buried. Smash subscribe and turn on all notifications. We're going deeper into deficits, vault flows, and nation-state buying in the next episodes. And let me know in the comments, does this leak make you more bullish, more cautious, or no change on silver? And what are you doing about it? Because on this channel, we don't follow slogans. We follow the math, the flows, and the metal.